Right, guys, welcome to Tuesday, 2nd of May. Those of you who are regular to my webinars, I usually start by just running through our sort of mandatory presentation, which includes an important disclaimer. Please take a moment to read this. We all know trading is risky, and you should understand the various nuances of trading before you start. The agenda for today, a little bit of introduction about myself. I'll leave that very, very light. We're going to then look at charts, and we're going to look at some of the free Zenfinex tools that are available to you, which I use to help me sort of confirm my market analysis and look for direction. So let's have a look at a few instruments from a chart perspective, and please do at any time, ask me any questions. Right, I will just run through that presentation one more time, just in case some of you latecomers didn't get to see this. I see a few people turning up. So as I said, we're going to do current market analysis. It's Tuesday, 2nd of May. Do remember, this presentation is for educational purposes only and not investment advice. I respectfully ask you to read the risk disclaimer so you understand all the risks involved in trading. And as I said, we're going to cover a few different topics, mainly, looking at live charts, looking at how I look for trading setups. And then towards the end, we'll look at some tools which may help you, free tools which may help you confirm your direction. Yeah. And I always have a Q&A at the very end of this. So let's go straight to some charts. And I thought I would start really by looking at the Aussie New Zealand, which I've been watching for a couple of hours. And we had a really nice big spike up on the Aussie New Zealand. I don't know if many people trade this particular currency, but I do tend to watch reactions to announcements. And this particular announcement was to do with an increase in interest rates in Australia. So that obviously had an impact on the Aussie New Zealand. An immediate reaction, if I go drill down a bit further, it literally happened as soon as the announcement was made, shot straight up, a readjustment of currency rates, and then it's been going sideways, for a small period of time. Remember, these are just minute charts. So I thought I'd just show you that, and the importance of keeping an eye on news and how that could affect your trades or your trade setups or your potential trade setups. So always, as part of your trading plan, keep an eye on news, and so you don't get surprised when that happens. So let's start with the FTSE 100, UK 100 on the Zenfinex account. We've had a sharp move here in the last few minutes as well, but that's London Open, right? So when London opens, particularly after a bank holiday, there's a bit of readjustments as traders start looking at the indices and how that may impact currencies. So we've got a little bit of a move here. And I'm going to do exactly as I do every single day. I start, from a longer term perspective. I'm going to get rid of all these lines, and then we can start sort of drilling down, and you can start learning, how I sort of look at charts on a daily basis. And it's really the habit that you should try to
We'll see. We have to keep our office in the IFC.
I just want to, I think somebody has their mic on who is on our webinar. Please, can you turn your mic off? Because we can hear some background noise. Let me see if I can do it at my end.
How we're going to split that out.
That should be better. So you should have no more background noise. So as I said, let's look at the FTSE 100, the UK 100 as listed on the Zenfinex platform and the MT5. And we're going to start looking at areas where we want to see if we can find any trading opportunities. And we can see right away, as we've done the last few days, the last few webinars, we've been highlighting, this strong level of resistance. And I'm going to put a little bit of support line here. I then drill down to my daily, and I've got myself a range that I can play with. Obviously, that's from a daily perspective. So we want to drill down a little bit further and see what it's doing from a sort of short-term perspective. Those of you who watched my trade on gold will note that I always kind of look at gaps because they're very, very interesting to me. I am going to do a whole video on gap trading if there's a demand for me to do that. If you want me to do that, just put in the chat box, yes to gap trading. So let's just put a rectangle here where when you ever have a gap appearing, even though markets have moved away from it, there's a very strong probability it will come back and retest this area. So these are great areas. If I just go on to the gold, I think it was actually, yes, it was gold, where we highlighted a gap. Maybe it wasn't that one, maybe it was this one here. So it came back down, kissed it, and started its direction up. We note that from a longer term perspective, that there is a resistance at 80.31, but we also have some slightly shorter term resistance, which we just want to keep an eye on. And remember, all I'm doing now is framing price action to see how I can find some trading opportunities, purely using price action. So we can see here, resistance, markets came off that resistance and actually continued coming off until it created this level of support and it's making its way back up. And we're almost back to this level, which was on the, on the 24th of February. So sometime back, we're coming to revisit, and we do have some other resistant levels just here, which I want to just keep an eye on from a short-term perspective. Remember, these are 4-hourly bars. So now let's go a little bit closer into the price action and see where would we be looking for trading opportunities. And those of you, who follow me in these webinars, I draw trend lines to see when they get broken. And then I look to see if I have any channels appearing. So I'm no longer looking at a buy at the moment because this trend line has broke. We've created a channel from this perspective here. And I think I did do a video on a trade call that we made at this point here. We believed it would retrace from here, and it came right down to this open gap. I think there's a video that I've created for that. And we can see now this downward channel has started to break down, but it's not enough of a breakdown yet because we want to make sure that this isn't just an expanding channel. And the way that we will confirm that really is by drawing some more turning points. So look, those of you, who follow price action, and I follow it very closely, created resistance, came down, and it's been sort of not particularly active, but then over, the bank holiday, I think it was, or Friday, we had a plunge down and bounced straight off this level of support, which we talked about. Now, the question we have to ask ourselves, what is our bias? Are we going to be a buyer or seller in this particular sort of configuration of price action? So let's just move away. We can see that overall the trend is up. There has been a break, but the trend looks like it wants to continue going up. So we could actually have a bit of a development where the trend could be heading. In fact, I'm not going to draw that line. That doesn't look that interesting to me. Let me see if I can just get rid of that. So we've broken out this downward channel, bounced off the gap that was created. We're now stuck in this sort of range here. What am I looking for? Obviously, there's some strength, right? So let's see if we can find levels where we might be able to find a buying opportunity. And remember, it depends on your trading style, whether you're trading from a short-term perspective or a long-term perspective. And those of you who have joined the webinar, please, if you have any questions, please don't hesitate to ask. But we can see here the price is, I'm just looking at what is going on. Let's have a look. I just have something happening on gold. Let's have a quick look at that. Okay, just had a little bit of an alert here on gold. Sorry to jump around a bit, but it's literally happened in the last few minutes, or starting to develop. No, it's not much of a move. Let's go back to the UK 100 and finish off our analysis here. So what do we see here? So markets opened about 13 minutes ago. If I go on to sort of a minute chart, we can see during those 13 minutes, it came down and then started bouncing off that level here. I tend to trade off 1 hour bars for sort of levels and stuff like that. And I drill down a little bit further into shorter time frames to see where I can find a better entry. So let's just look at the up price action. Came off here, hit the top of the channel, came back into the channel briefly, and now it's trying to leave this downward channel, which would indicate some strength. So if it's indicating strength, where do we want to look to get in from a safety perspective? So I tend to look for pullbacks. Okay, so markets went up, came down, came up, went back into this channel, and now it's starting to make its way up towards these levels of resistance here. So the potential trading opportunity that I see here is that we're definitely going to have a little bit of resistance, more than maybe a little bit, because remember, if I go back in time, this last level was created, around February, March time. So we're now heading back into this level here. So if we did take a trade here, these are the areas, these two levels of green resistance will be areas that we're going to have to watch closely for. So if we just pull back now, go to a smaller time frame. And although it looks like it's trying to head up to these two lines that we just talked about, I always avoid chasing price. Yes, you might say to yourself, well, look, price is going up. Why don't we just jump on this particular trade? I don't do that. I look for pullbacks once I'm confident that this is is an upward momentum trade. So if I draw another level here, so we see here at 73.82, it's broke through that. So there's a very strong probability that it will come back, retest this 78.82, and we then start developing a trade. So let's just I'll just draw a few lines where I think the stop loss should be, where my entry will be. And by entry mean I will place a pending order. And now that this is broken, I expect the next level that the market will have some resistance is just, whoops, I'll leave that there. If I delete it, I'll get rid of some of the other lines. So let's just, so apologies for my crude lines, is really just as a sort of illustration for you. So we've developed where we believe the stop will be, which will be under this swing. It's broken out of here, but we're not going to chase it. Even if we find that it gets very close, I'm going to put a pending order around here, around this line here. I'll just move it so you can see it, because that's where I believe it will come and retest and then head up to this direction. And with a stop loss around this level here, I've got my trade set up. So just by using price action, a few lines, we've developed a trading idea. And the importance is that we don't chase price. We don't try to run onto this, because what often happens, and those of you who have traded before may note that as soon as you get into a trade, particularly when you try to chase a trade, it will retrace back on you and maybe even stop you out. So this is why I never chase price. If it goes on and hits this level without me getting the trade, I don't worry about that, because there are plenty of trades. There will always be plenty of trades. And, by learning and by having experience, you'll know that chasing price is not the best way of doing it. So let's just now see if the price will now come and retest this 78.92 level. I just want to make sure that's 82. No, it's 78.82 is where I'd be looking and watching to see if price bounces off this level. And if it does, I know where my entries are going to be. I know where my target's going to be. I know where I'm going to stop loss is going to be. And just to, go through my thought pattern being, we had an uptrend, the channel, since 24th of April has been sort of slowly grinding down. It eventually came back to the opening gap that we have talked about here and bounced off that level. So the fact that it's done that, my state of mind, or my idea really is, where can I get in to go long? I want to buy this particular index, because I believe that if it does pull back to this level here, there is a good chance that it will make its way up to around 79.24. I'll watch this for a few minutes, and those of you who are interested in sort of doing live trading with me, we will also be doing some live trading webinars as well. So please register and keep an eye out for those, because there are different types of webinars we can do. There are market analysis, and there are live trading. This one's much more of a market analysis webinar, and the live trading will really be by sort of by registration and by invitation only. They are still free, but we want to make sure that you have an account and that you know what you're doing before you start looking at live trading. So let's just watch this for a few minutes. And one of the important things that you need to understand about trading is the importance of patience. There is such an urge when you see this bar here, this green bar, come down and momentum is pushing it up, you to just jump on it. And in my earlier days, I've done that so many times, and now I know that that's not a good plan, because often it'll exhaust and then come down back to a level before it will continue its journey. So we'll just watch this for a few more minutes, and then we'll look at some other currencies in a second, but I want to just see how it reacts to this 78.82 level. In the meantime, if anybody has any questions, please don't hesitate to ask me. This is what I'm here for. Just by watching, this price action, and I'm now down to a 1 minute time frame, so I'm not suggesting you trade off here, but I'm watching to see how the buyers and sellers are reacting. What I mean by reacting, is price being pushed up even when it comes down? And that kind of gives you an indication that there is, strong momentum up. And what we're really looking for is we're looking for price to find a level here, support, enough for the pullback traders to load up before it goes on to this direction here. But obviously, we've already talked about it, that if we're wrong, we have a measured stop, a stop in place which makes sense and, will give us an indication that if we're wrong, then, this is as good a place as any to get out, where prices moved away rapidly. And if it comes to retest this, it means our idea is not correct. But right now, I can sense and feel that every time price tries to come down, the buyers are trying to get in, at better and better prices. Remember, this is a 1 minute chart, so this is not what I use to trade. I'm just literally watching price action as it sort of behaves. And that will give me even more confidence, knowing that there is a general pressure upwards. And let me just magnify that and see what we think. Remember, we're looking for prices to come to, about 78.82. And if we had a pending order there, that's where we would put it. And with a stop loss just below here. So this actual low is 61. So I've been looking, at around the 50, 58, 57 mark. So it's come exactly to the 78.82 level. Now let's watch what happens. So in my live trading room, this is where our trade would have been picked up. So now that we're at this level here, we know where our stop is going to be, which is just below here. And I'll change the color of that to a red line. So we know that if it breaches it, we've been stopped out. And in the meantime, let's have a look at some other stuff. So I always look at gold. Let's see what gold is doing right now. And we'll come back to the FTSE and we'll look at it from time to time. There's no point just staring at a trade setup, as it'll drive you crazy. So here we have a weekly perspective on the gold. We talked about the fact that while we're in this orange box, we want to be very cautious of taking a trade. I think I've said I think it was last week on one of our webinars, I really want to see a breakout above or below. I think I'm just going to straighten this line out. It looks a bit odd. So if prices break through this level here, which is around 71-ish, look, it's quite obvious the gold price action is strong. It's found a range where it's going sideways, and it has been for, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 11, 12 trading days. Now, I could actually push that further back, but these are the two levels that I'm going to be watching for in terms of breakouts. Those of you, who want to register for the live trading room, you're more than welcome to, and we'll be having those on a regular basis. You'll get alerts, and you'll see me placing live trades on my live account, and watch how I trade. Basically, let's just go back to the FTSE 100. Let's go back to that minute time frame. So look, it's done exactly what we thought. It came back to 82. It went a little bit further, but remember, our stop loss is down here somewhere. So we'd be in profit right now. And what I expect it to do is just pull out a little bit further there, just to make sure that my target is precise. So my target would be 79.57. And the reason why I've done that, just so you can see, is that I can see that prices came down, hit this level of support, hit some resistance here, and it couldn't get past these 2 points here. I'll put a cursor on so you can actually see it. Past these 2 points here, and then it came down, and we're exactly at that same level now. I mean, my belief is that it will probably come and retest this, but I'll be happy if it gets up to this level here, because I would have made the profit. I'll talk about lot sizes, account sizes, and all this kind of stuff on my live trading rooms, because this is much more of a general market structure type approach, and I don't really want to get into live trading on this particular webinar. But on a live trading room, that's all we do. A group of us will just look for trade setups and place them on our live accounts. Let's go back to gold for a second. And as I was mentioning, although, if you go to a small time frame, you think, wow, gold is moving a lot. But if you look at 1982 to 1984, it's only 2 points. So the perspective is also in the time frame that you're looking at. From a longer term perspective, I see it going sideways, and I don't see a trade set up at the moment. As I said, I'll be looking for a breakout on either side of this orange bar. So let's just have a look at some any other charts that might be interesting. So we've looked at gold, we've looked at FTSE 100. Let's look at British pound, see what that's doing. And I'll do exactly the same thing. Look at it from a weekly perspective. You can see there's levels of resistance here. Prices came down, tried to react. So this actually is an important level here. Why is it important? Let me change it back to green so we don't get mixed up. So prices came down from a weekly perspective, tried to increase in value, but then it came back down. Now we're just approaching that level. We're not that far away. We go from a daily perspective. And that's that level that we just drew. So after this big move down, it's starting to grind its way back up. And we're going to be approaching this level, which is about 150 pips away at the moment. So if we were to take a long trade, we would know that that's our limitation, or that's where as far as could go in the short term. Short term, that's an odd thing to say from a daily perspective, but we just know that there is going to be some issues around 26.59, probably 26.50 if I'm being really honest with you. So from a 4-hourly perspective, let's let me go back to the daily for a second. 26.50. Now let's go to sort of a 4-hourly. And we can see where this resistance line is. So we're not that far away from a 4-hourly perspective. And the way that we know we're not that far, look, on certain days, it can move quite substantially. So there's no reason why it couldn't reach that very, very quickly. But what we have to do is to see if we can find a trading opportunity. So let's expand that a little bit and try to draw some trend lines and try to draw some other stuff which can give us levels where we might think about getting back in. And we can see here, there was some, from a 4-hourly perspective, some resistance. It broke through it, and now it's using that level as a level of support, not a particularly strong level. We can see that there is support. I draw, we'll get a bit closer to that. We can see here that it's sort of oscillating around that level here. It's broken through, tried to move away from the British pound from this support level here at 24.36. And as we just talked about, there's some heavy resistance, 26.50-ish, something like that. So where do I see trading opportunity? Let's have a look. From a pure visual perspective, you can see here, whilst there is a bit of movement up and down, looks like we're breaking through this range that's been developing since sort of end of March. It's been stuck in this range, going up, down, eventually broke out, came back to retest it, and now we're really looking to see if it can then find strength to head back up to 26.50-ish. So the level we're really going to look at is 2,500. So that's kind of our trading range here. If I go into a bit closer, so we can see prices from a 4-hourly perspective tried to break out of it, came back into this range, but because of this now, what it's really doing, I expect it to break this again and head back up to this level here, sort of from here. Oops. To there, and I would be looking at sort of putting a stop loss. The safest one will be underneath this range here. So the risk to reward may not be there. Yes, you can think about putting, the stop loss at this level here and this level here, but the risk dramatically increases because it's really just going to be going back into this range. So what we're really looking for is when price breaks through, and I expect it to do that, it will probably march on to this level here with a little bit of resistance here, but I don't believe this is that much of a resistance level at the moment. That was, I think, a couple of days, 3 days ago. Let's go down to a smaller perspective. So after all this kind of movement, it came back into this range. The fact that there has been trading outside this range gives me, confidence that when it breaks out again, it will probably head just below this level here, 26.50. let's see what our FTSE setup is doing. So you can see here, fair amount of volatility from a 1 hourly perspective. I'll go to 5 minutes. So remember, our stop was here. We looked for the breakout back into this range here for it to continue going up. Right now, it's hovering. But because we've got our stops in here at this level here, which was, I'll just expand that a little bit further. And our target up here. And, once price starts moving up, we can start moving our stops a bit closer, but because of this long spike here, I'd be reluctant to put a stop much closer just yet, because it could come and fill this wick. It could come and revisit this level here. So that's something we'll have a look at tomorrow, because we're getting to a point where I just need to cover some other stuff with you. So let's just go back to our PowerPoint. And what I'm going to do is, by the way, these are my contact details. If anybody's got any questions, don't hesitate to contact me. If you want any help getting set up with charts, etc., feel free to reach out. My role here is trader education, to help people who've been trading for a while or brand new. I can kind of help you to get started, and certainly in the right direction. Everything that we do here, is on a free basis. So don't worry, there won't be any charges or anything like that come. So don't be wary of that. So we've looked at the British pound, we looked at the UK 100, we looked at gold. I want to just run through some tools that we have and see how they may also help you in your trading journey. And again, if I haven't reiterated it once, I'll do it again. These tools are free. So, register, have a look at the tools, and I'm going to just run through these tools right now. We're mainly going to focus on the technical views and featured ideas section of the Zenfinex tools. So let me just show you what they look like. So this is the Zenfinex free tools that we offer. Really, they're just to help you understand what's going on. And on this particular section, I was just having a quick look at the calendar. I think I've covered the calendar in another webinar, but this is a really cool economic calendar because you can do some sort of interesting analysis. I'll try to show you the Aussie dollar, see if it's in here. What date is that? It's not on here at the moment. Let's just go into the other features of this particular tool. And the Plus Zenfinex tools, or Zenfinex Plus, we have analysts provide their analysts for you on a sort of, continuing basis. So throughout the day, you'll be getting potential trade setups. And what I always try to do with students or people who are new to trading is just run through some of these, because they are really quite useful, not only as for looking for trading opportunities, but also seeing how other analysts look at markets. And one of the things I'd encourage you to do once you've registered for this free portal is take a look at some of these trading setups and see if they make sense. Particularly the ones that just happened. For example, this one was at 8:26 a.m. London GMT time, and so that was about 20 minutes ago. And 20 minutes ago, they were kind of indicating, and I'll read back to you what they are saying. So they're looking for a short setup on the basis that the RSI downward momentum. It's also highlighted where support and resistance levels might be from this analyst's perspective. And they believe that the short position, if it gets below 35.65. So why don't we just have a quick look at charts and try to look at this trading idea that's been put through. And remember, once you subscribe to this free service, you'll be able to look at all these different trading setups and see, how they may help you. But let's just have a look at the USD CAD on our charts. Let me just go through the charts. Let's get the charts back up again. And let's look for USD CAD. So we click on USD CAD. And I want to just go back. Sorry for going backwards and forwards a lot, but let's just see what they were saying and make some notes from that. So this is from a 30-minute perspective. So USD CAD 30-minute chart. It's got a Bollinger Band. It's got a 50 moving average, and it's got RSI and a 9 period moving average on the RSI to get a signal. So they're kind of looking at the fact that this has gone below the RSI and that prices are below both those two moving averages, that there could be a short setup. So let's go back to our chart and try to replicate what they're saying and see if it makes sense to us. So we go to our 30-minute chart. And remember, this is this came out about 20 minutes ago. So they are, let me see if I can draw the same line. So I'm just going to get rid of all the lines on this particular. It's very interesting. Let's get rid of some of these lines. And we'll do what we've been doing on all our webinars, is start from top down, even if we're trying to take a 30-minute intraday trade. Let's just go back to the daily, and we can see here from a daily perspective, we've got some levels of support here, and we've got some levels of resistance here, another level here. And as we drill down, we'll start looking at other levels that they indicated on their trading idea. So we can see that I can certainly see there's some level of support here because it's bounced, came back, and we're right at this point now. So the next level, and this is resistance. So we can see here prices came up, came down, resisted, broke through it. So there's a chance that it could come to 34.85. I'm just going to jot these down and we'll compare them to the suggestions made by the analysts. And this is an exercise that you can do at any time once you've registered for this, because you can just start learning how analysts are looking at different levels and how they could make sense to you. So I'm just using 34.85 as my level of resistance turning into support, and it needs to break through 3524. So let's just go back to their trading idea and see what numbers they have put forward. And if they start matching what we have, then we can start building our expertise rather than coming to these webinars and stuff. You can just look at this. So look, 34.80, and I had 34.85. I still hold my 35.85 because you want to be just a few pips away. And they've got another level of support at 35.00. Mine was a little bit higher than that, but they're looking for a short setup, an entry of 1.3531. Let's have a look where we are now. Would we have been triggered? So short position below 35 65. So that's what they're calling short below this level here. So just highlight what you can see. Whoops. With a target of 34 and 35 with an extension. So let's go back to our charts. I'll just take a note of these. 3,500, first target, 3480. So if we go back to live charts, so we got our levels of support at 3424. They've got, there's just a little bit lower, sorry, a little bit higher at 30, entry is 3565. 3565. And currently we're at 3541. Let me just expand that so we can see where the entry point was. 3565. I'll just draw where the entry point has been suggested. I'll make it precise. 65. I'll just change the color to another sort of distinct color. Let's make it orange. So they're saying that this is 1 hourly. So let's just go back to their suggestion. Short position below 35.65. $35.65. So they're calling the short sort of over here somewhere, but I think we only got the alert a short while ago. So maybe what they want or are suggesting is that it comes back up to here, and then it will come to this first target here, and then the second target around there. So they're waiting for a pullback into this area here. You know, half of it taken off at this level here when it breaks this level here, which is at 35. I think they put 35.24, 35, yeah. So that's their trade setup. So just going back to the plus Zenfinex tools, you'll see that there are plenty of trading opportunities. You know, if I just click on USD Swiss franc, this was at 9:26 on Tuesday. That's CE time rather than GMT. So you've got to do a bit of calculations on the time. And they're looking for a breakout above here. And the cool thing about this tool is that you can try to find one instrument that kind of suits your trading style. Let me just bear with me for a second. USD JPY, so there's a USD JPY, so it's been going in an upward momentum, long position above 37.25. So it's giving you, you know, where to get in, where some targets are, and alternatives. You know, if it goes below a certain level, then you'll be looking for a downside trade. So they're seeing at 37.25 as a key area. Buy above, sell below. And the reason for it is an RSI upward momentum. Obviously, for the short scenario, it'd be a reversal trade. So this is a pretty cool tool here that you know, you can subscribe to. It's absolutely free, as I've said many times. And one last thing that I want to look at is featured ideas. So let's go to featured ideas. And this is a similar kind of page where it will give you some, you know, pattern recognition stuff here. So on this particular one here, although it does say this trade idea is no longer valid, if I refresh that, it will then look for ones that we might be interested in trading. And there's some exotic ones here, for example, the USD Turkish lira, Aussie against Turkish lira. I don't trade this, so I'm not going to look at those. Let's see if there's any others. So right now, they're kind of calling the South African, British pound against South African. There's a engulfing bar, which is a bullish pattern. So it's really looking for a breakout on the upside for this. So, you know, in summary, all the tools that are available on the Zenfinex Plus platform will include things like the calendar that I just referred to earlier. You can look at, you know, what news items are potentially coming up today. You can decide whether you want to just look at, you know, the majors with a high impact. And the really cool thing about this is, so these are sort of probably going to come out in the next hour or so. So you can actually look at and see, you know, is that going to affect the euro dollar? I'm just looking over here for a second. And, you know, you can glance down for tomorrow. And if it's not just the high ones, I would put medium and high, because it will give you a lot more opportunity. For example, 9:30, we've got some manufacturing PMI numbers coming out, obviously going to affect the British pound. Some Italian numbers, which could have an effect on the euro dollar. And then later on at 3 o'clock, we got some job opening numbers. This will probably move the market quite substantially with factory orders. You know, if I just click on what these mean, so if I just go to, you know, what's happened in the past, how prices have reacted to that. So let's just have a look. So they're expecting, and I think if I click on this, it will tell you, you know, factory orders represent compiled manufacturing shipments, inventories. So this one is quite an important number. We can look at how this number behaved in the past. So these are monthly figures that come out. So we can look at, for example, how was the actual versus the forecast. And what I think is really cool about this particular tool is that you can actually see how that impacted price when previous news announcements for factory orders came out. You can see here that when this came out in April last month, news came out, the forecast was 0.6, the previous was 2.1. And so this was actually better than, let me go back to that. This was better than forecasted, and that had an impact on the euro dollar by, in the first hour, moving prices, you know, 68 pips. So this is another cool tool, because sometimes when you look at, you know, calendar events, there's not a place where you can go to see how did that last previous news item affect current price. So it is worth doing a little bit of, you know, looking around here. And if I wanted to go a little bit further into 4 hours, I could see, okay, once this news came out, in the following 4 hours, how did price behave? It went as high as this amount here, and then it retraced to this level here during the 4 hours after this news, which was higher than expected. So if we use the same principle based on this, you know, if we go to what is projected here, so they're expecting 1.2 increase from last month's 0.7%. So based upon what the quick glance we looked at, if this is going to be higher, it's likely to impact the euro dollar positively. And therefore you can, you know, you can set your adjustments based on that. So you do actually have to wait for the figure to come out. But as soon as it comes out, you can see what it did in the last, in the next 4 hours from last month's numbers. So this is a really cool tool. And I would really encourage those of you who like to trade news, utilize this tool, because you can start getting a feeling on, as soon as the news announcement has happened, what did price do in the next hour or half hour or 15 minutes? That can definitely help you for the news traders amongst yourselves. What I'm going to do now, we're coming up to the last few minutes. I just want to make sure that you understand how to access these tools. You simply go to this domain. You'll be asked to register. It's totally free. Get access to it, start learning the tools, and then on these webinars, I can show you how to use these tools. And you can ask me questions on, I don't understand this, what is that? You're more than welcome to email me. Just put my email address here. And I'm more than happy to reply and give you some help on how to utilize these tools. So look, I think we've just come up to the 1 hour mark of our webinar. I'm just going to have a quick look at our charts again, just to see where everything and what everything is doing. Let's go back to the UK 100. I think we were on a smaller time frame, so remember, I don't know if my lines have disappeared. I think they have. So we were looking at a pullback to this level here, weren't we? We had put a stop. It's a pity the lines have disappeared on that, but I'll do that again, and we can look at this tomorrow to see how prices behaved. And I'm just going to give a few seconds of sort of Q&A. If anybody has any questions, please ask. Let me just see if we've got questions. We've got about 5 minutes for questions. So please, if anybody's got any questions, just type them in the chat box and I will try to answer them. And we can use charts or the +Zenfinex tool to help you. I'll give it a minute or so. Don't be shy. Ask a question, any question you want. I will try to help you. Let me know. Are you a beginner? Are you an advanced trader? Do you use particular types of tools? Do you want to ask me what particular tools I use? So this is our Q&A section, and please don't be shy. Okay, what is the best way to prepare or react to interest rate decisions this week? Great question. So for that, I'm going to go to the +Zenfinex calendar part, and I'll try to explain how I would do it. So let me just pull this down. Let's go back to the... So just bear with me for a second. Let me just that. So as I said earlier, we can use economic insights, and I'll just try to pinpoint the interest rate. I presume you mean, CPI, which is going to be on the 3rd, which is tomorrow, right? So if I click on the particular one that we want to look at, just bear with me for a second. So we've got the interest rate decision here, and that's going to be based on UK time at 7 o'clock, and that's going to be tomorrow. And what this tool is really good at is that we can look at past events, right? So if we look at the event calendar, we can see that based upon previous interest rate decisions, how they reacted with forecast against actual. So we can see at first glance that obviously interest rates have been climbing. We can look at what the expectation is going to be. The expectation is that it's going to go up 0.25%. And we just looked at the event calendar, and we saw how prices have been moving up continuously since March of last year. So if we look at impact, we can see based on previous how price affected on the euro dollar. And by the way, you can change that to any instrument you want. But as it happened, we were looking at the euro dollar. And I don't know which currency you want me to have a look at. Let's see is there a particular currency that you want me to look at in terms of the interest rate? Best way to prepare for interest rate decisions. The follow-on question should be, yes, but which currency, or are you talking about impact on gold or impact on the British pound, impact on the dollar? So gold and indices, if that's possible, that's cool. Right, so I'm going to focus on gold. Let's just see if they've got gold here. You know what? They've only got it based on currency. So let's just look at euro dollar, because that is the most widely traded instrument. So here, if we look at previous events, as soon as the news came out, price went in the positive direction, and and there was no actual interest rate announcement. The fact there was no interest rate announcement in itself for the euro dollar, for the euro, it was positive. Let's go back a little bit further to another previous one. Let's look at one where the forecast was greater than. So let's just have a look at that. So they're all kind of hitting forecasts. And if you look at, and this one was November, December. So they're pretty good at forecasting what it's likely to be, right? So March, they forecasted 5, it went to 5. February, they forecasted 4.75, it went to 4.75. And you can see, even though it was as forecast, the actual prices had a bit of a jiggle, but they moved upwards. When I say price, I mean the value of the euro against the US dollar. So it behaved positively. Now, if we look at the next event, so this one again, positive. This one was negative. That was in December. December's always a funny month, right? So November, as soon as the news came out, it popped up. So on the last 4 occasions when actual was the same as forecast, the prices moved up. Now, what we're able to do is to decide, if we're news traders, how much into the future on past events did it move. Now, if we're just looking for, literally just jumping on, price action as soon as the news has been announced, we can look at 1 hour. So let's work backwards. So let's go to March. So in March, there was no rate increased and it matched forecast. So therefore, prices shot up in the hour after the event, right? Useful bit of information. On February, actual was the same as forecast. It had a dip, but within the hour, it ended up 94 pips higher. Look, very volatile, right? Let's not get romantic about this. Trading news is not for the faint-hearted, right? So you've got to make sure that you know what you're doing. But this particular tool can help you to look at a past event and see how that affects it. Moses, does that answer your question? I'm sorry I couldn't do gold or indices. This particular feature only works on currencies. Does anybody else have any questions? Yeah, that's very good. Yeah, so sign up for this, right? Utilize this tool. And it's all about preparation, right? You can go back at previous news events and see, how price reacted. Now, is it 100%? Is it guaranteed? Absolutely not. But it can start making you a little bit aware by saying, you know, for the last 3, 4, 5 events, price went up. So if actual is the same as forecast, I know what I'm going to do. I'm not going to say on this webinar what I would do, but you know, you can use your analysis and, you know, do it on that basis. But just remember, trading news is not for the faint-hearted, and it is risky. Right, are there any more questions before we call it a day? I will be back on Thursday, and you know, I'm hoping I'll come armed with some questions so we can like do some interesting stuff, and I can kind of help you along your way. So on that basis, I'm going to have a quick look at the charts. And the FTSE is kind of popped out that range, but it's now back in this range. Again, we know where our stops are, so we're safe. We know where our target is. Let's see what gold's doing. Right, so gold's showing a bit of weakness. Remember, we're trapped in this sideways action. Although it's quite a big range, you're going to get kicked around if you don't, you know, obviously if you use reversal trading, that could be a way to trade gold right now, but I'm going to stick to waiting till it comes out of this orange box before I start getting excited about gold. And on that note, unless there's any more questions, I'm going to call it a day for today. Don't forget, I'll be back on Thursday, 8 a.m. London time. Come armed with questions, send me charts, send me your analysis, and you know, I'll try to help you and sort of guide you in terms of some cool ways of alternative ways of looking at markets. So on that note, I wish you all a great day, and I look forward to seeing you on Thursday.